So I've sent you a chart in the chat. Did you receive it?
Let me check it out. I did see that you sent something. Here's the chat. Okay. Yes, I got it.
Okay. So I'll explain it to you like a bit more after the call, just because it might take some time. But in general, the reason why I wanted to send this is because if you look at the highlighted zones that I've marked, you see those blue boxes?
Hmm.
You're gonna see this is what I meant by Bitcoin having phases, right? Specifically Bitcoin. And the reason why, personally, in my opinion, it's so easy to forecast is because these deceleration zones actually follow a very similar time period every time. For example, if you look at the most recent box, yeah, the most recent box that says that's got those lines on it saying potential retail stops and stuff. This is
Okay.
what I mean when I say that Bitcoin moves in deceleration and acceleration. And the fact that the green box after that is showing a massive, massive pump and barely any consolidation to the side is proof that this system has actually worked really well in the past and it still is working today. And the reason why this deceleration happens is because Bitcoin as you know as an asset is very very useful, and the institutions see this. This is why BlackRock's fund is actually the biggest holder for BTC because they see potential in it, and the fact that they've been accumulating at such a high price, which was they were literally accumulating above 50K, which to be honest is pretty high because we've called it since 15K. But the fact that they're doing it so high is proof that there is a lot of potential in it. And these deceleration zones are either used for institutional accumulation, or it could also be used for distribution when the money comes out of Bitcoins and into the altcoins. So I believe if you are, I think you also had some questions regarding altcoins. We can get to that. So this is going to expand onto that. I just thought I'd put that out there.
I would like to, say something about Bitcoin and Ethereum, So, the main difference between Bitcoin and Ethereum that people don't understand is that Bitcoin runs on proof of work consensus, which basically means the one who does the most amount of work gets to say what happens in the blockchain. Yeah. But the twist is that it's decentralized, so the work is decentralized. No one can, make changes in Bitcoin. But when it comes to Ethereum, it's proof of stake consensus, which means that it used to be proof of work, but now it's proof of stake. So, which basically means the one who has put the most money into Ethereum, he gets the say on what to do with Ethereum. It is still secure because, we might think, oh, capitalism, someone can capitalize with that. But it's still secure. Ethereum is still secure because of slashing. Slashing is one important thing in Ethereum, that if there is some validator who tries to be dishonest with the blockchain and tries to do something shady with the blockchain, their coins get burned. Now, I know a lot of Ethereum holders, Ethereum maxis are going to hate me for this, but Ethereum is centralized. It's not decentralized. You can't have that much power over someone's coins and and say that it's decentralized. For example, Satoshi cannot burn your Bitcoins. It's not possible because you have it in your keys, your exchange, your
Hmm.
keys, your coins, basically. But Ethereum, Vitalik can burn your coins if you're trying to do something shady, which I think is fine, but it's still centralized. You need to understand that Ethereum is centralized. It's not decentralized. It's basically like, let me say that in layman terms. Steam and Epic Games, they basically announced that, you can't own your games. You just get license of your games, you know? And if you do something shady, they can ban you from it, or they can just remove the game. So that's basically what it is in the layman terms. So that's something that makes Bitcoin again really unique. Ethereum is unique but not as good as Bitcoin.